Hey guys, Yaroslav here. I welcome you to another course on the basics of finance, and today we're going through a very interesting topic called fundamental analysis. We're going to track economic indicators and we're going to see how that affects different currencies and perhaps even stocks. Now, what is fundamental analysis? Basically, it is the why behind a movement in the market. The very basic premises of it is the more something is in need, the more we want something, and the less of something there is, the higher the price will climb. But if there's oversupply and something is abundant, it drops in value. Very simple to understand. Now, fundamental analysis is dedicated to gathering economic, political, and social factors into an understandable format, and we analyze what kind of effect that will have on a currency, stock, or any other asset class. Let's take this example of the euro dollar. So you are very keen on studying European Union politics and the economy of the United States, and through your research, you come to the conclusion that the US is far better off, and that in the future, they will have a stronger and more reliable economy. So in that case, you sell the euro-dollar currency pair, because when you sell the euro-dollar, it means that the US economy is stronger and outweighs that of the European Union. So I hope that example makes it pretty clear for you. Now let's dig in deeper about what kind of indicators, economic indicators there are. Now there are two types. There's lagging indicators and then there's leading indicators. Now what does that mean? Basically, a leading indicator is something that happens already when a change is happening. So they're the first it's the first information that you receive that you will know that a trend is changing or that a new trend is forming. Right? Simple. Now, what is a lagging indicator? A lagging indicator is something that we get out of history, something that happened over the last quarter, the last month, or the last year, so that we can have a more holistic picture of what is happening. Now, we won't go into detail into each and every one of these, but I'll give you an idea of what each of these are. So for lagging indicators, the most important one is GDP. How much, and this is, it is recorded in percentage change, percentage growth. So changes in the gross domestic product, you will usually find them in a percentage change, and that means how much more is the economy producing compared to how much it is consuming. Basically, it is the whole sum of all the production in the country. Now, income and wages, basically that's how much me and you earn. Unemployment rate speaks for itself, how many people have jobs and how much don't. Consumer price index, that is a basket of first priority items that is in the local currency, basically. And that changes, and that is the number one indicator of inflation. Now, currency strength is a lagging indicator because it happens when investors catch on to what's going on with an economy. Interest rates, also a very key indicator. Corporate profits and balance of trade. Now, balance of trade is what I was talking about when we compare that what we import against that what we export. Very simple formula there. Now, leading indicators, one of the best leading indicators is actually the stock market. You can see what is happening in a country right away by looking at their index, the top index of their stock market. Other leading indicators include manufacturing activity, inventory levels, retail sales, building permits, and everything related to housing markets, and the level of new business startups. You can research each and every one of these yourself. They are very important and very interesting because they all affect our daily lives in one way or another. Now, this is the type of analysis that I want to bring forward to you, and I hope that you take away that the importance of volume and sentiment analysis. Now, what is sentiment analysis? It's a form of fundamental analysis. It shows us how many traders open up positions in asset classes. So we can see how much trades have been done, with Apple stock or oil futures or a currency, how much money has flown between governments or between banks of certain currencies. Now, I really strongly urge you to always have volume open on your chart, because it is the one indicator that really solidifies my desire to enter a trade. So let me give you an example. You are very bullish on a cryptocurrency like Monero. The market has a bearish sentiment. That means a lot of people are short, are selling the cryptocurrency. Then the market will continue to go down. And it's a pity if you go against market sentiment. Say you're very gung-ho on the benefits of Monero to humanity. Nonetheless, market sentiment will drag you down. Now, let's put all of this together in a very clear picture so that you understand. Now, let's imagine that you see the economy turning around and recovering and showing strength and growth and prosperity in the near future. So you dig deeper and you start to analyze the macro data. Crowd appetite, i.e. sentiment, is rising due to the positive data. More people are investing in stocks. You can get that information from your broker or from the stock exchange itself. Both NASDAQ and the New York Stock Exchange, they provide these numbers of sentiment. And then you can decide to enter the market. But now there's another question. Where do I enter? Where do I put stop loss orders? This is done with can this be done with fundamental analysis? Yes, it can, but to be more precise, it is best to do it with technical analysis. So you have a possibility to analyze where the peaks and valleys are of that asset class and enter more surgically, more precisely. And another thing, remember that a trend can last for a really long time. So a popular practice in 2017 was to buy any dip. Any stock that was very good, that was a solid blue chip stock, any dip that they would have, it would be bought up by retail investors, institutional investors. So that strategy works as well. And that's how we combine technical analysis with fundamental analysis. We analyze charts and we understand what is going on in the economic backdrop. On our next lesson, we're going to dive deeper into technical analysis, into some really cool and interesting things like chart pattern and indicators. These are an addition. They're not mandatory. You can invest in the long term without knowing these things, but they will add to your understanding of the market and make you a more professional trader. So I look forward to seeing you next time. Thank you so much for your time. Take care. My name is Yaroslav Burchenko. If you like this video, leave me a thumbs up.